Welcome. Today I will be doing something I only plan to do after I'm done with my little financial series, but with recent developments and how things are a bit muddy all over the place, I've decided to kind of share my thoughts about AT&T and what has been going on as of late. As an amateur investor and also a holder of AT&T, I wanted to share with you what I plan to do with these developments, how I understand them, and hopefully get a conversation going down in the comments or just in general about what has been going on and what's to be expected of the company in the future. First, a little review of what has been going on. A few days ago, AT&T has announced that they are planning to sell their content creation and streaming section, mainly comprised of HBO, to Discovery, who will also kind of split themselves apart, creating a whole new content creation and streaming company. If this company is actually created, that will result in the third largest streaming and content creation company being born, right behind Disney and Netflix. This, along with the news that AT&T plans to cut back on their dividend by 30 to 50% after this sell occurs, kind of left most of their investors either flee the market or scratching their head thinking, am I supposed to keep the company? Is it time to sell? Is it time to double down? The answer is kind of up to you. I'm going to discuss my opinion on the matter. This is what this video is about, why I plan to do what I plan to do, and hopefully generate a little discussion on whether I'm right or wrong and kind of come up with a solution as to how to handle this situation. As I am generically more on the pessimistic side, let's go over the negatives first. I would imagine that for most people the deepest cut is the dividend cut. AT&T, let's be honest, has not been known as a growth stock. It actually have been on a slow and steady decline price-wise since 2016, mid-2016 to be precise. So, although it was a relatively stable and trustworthy, safe-ish company, it was really not known as a value stock. The main reason the stock remained as popular as it is was its 67% dividend, which places it amongst the best dividend paying companies, like comparable to REITs. This very high and very stable dividend actually gave it a spot amongst the dividend aristocrats, which is basically a list comprising of companies that has been consistently paying dividend without cutting it for a very, very long time. This is a spot that this little escapade is no doubt going to cost AT&T. The second negative as far as the split is concerned is definitely the loss of a portion of the company itself. Many investors have really cheered AT&T on when they acquired Warner Media, as there seems to be a lot of potential and financially a lot of income coming from streaming services as of late. This also gave the company another leg to stand on, so to speak, like some internal diversification that the company had, another source of potential and potential revenue, which it will lose now. The third negative is the uncertainty with the price. Like, it's no surprise that because of this whole split, there's many uncertainty with the company, so its price will be extremely shaky and volatile for the next year or so, like pretty much until the new AT&T and this new streaming company is born and have begun their process. The price of AT&T is probably be extremely fluctuant. It will move around a lot. It can drop quite significantly, although I would assume that there will be a lot of ups too. This will be really hard to sit through as an investor and will most likely not do your heart any good. The fourth and last negative I can see is a bit of a conspiracy theory. This one is not really out there, just something worth considering, that since they are planning to sell Warner Media at a much lower price than they acquired it, one could argue that this kind of points towards the company being in a much worse state than most people think that it actually is in, and it could signal that the company is in a bit of a desperate stage. I don't think that that's the case, but it can easily be construed as such. With all that said and done, why am I still bullish on this company? First, let's tackle the dividend issue. It's expected that the new dividend after the reduction should be around 45%, which is actually still pretty high considering how other companies pay out during this market. It is less than the 7%, so investing into the company for dividend and dividend alone will probably no longer be viable, but 4 to 5% is still a really commendable dividend. Especially since we must consider that the company is willing to and seems to be planning on paying using most of the free cash flow they generate from the decrease of in dividend and a significant portion of the money they get for Warner Media towards decreasing their debt, securing themselves a lot more cash flow in the future, potentially for increase in dividend or other buybacks which will raise the price, or at the very least will make the company much more stable and the dividend itself much more stable. Price-wise, pretty much every financial article I've read on the issue has been stating that AT&T going back to its roots, doing what they are best at, and focusing on building out the telecommunication and networking systems, will almost certainly result in a long-term price rise. So losing that 2 to 3% in dividend, you will probably get back in the form of general growth in the price or in the form of share buybacks, which will again increase the price. So basically what's happening here is that you're trading dividend income for growth potential and quite likely market income in that form. Personally, as someone who started out as a dividend investor and then quickly transitioned into a more safety and dividend focused value investor, I actually like this new arrangement much more than the previous one. Right now, I will still get a decent amount of dividend, after the split and the dividends reduction, but if the price keeps going up, that's actually more income for me. Like the way it used to be, AT&T paid a really high amount of dividend, but at the same time the price kept dropping, which is just really bad for people's hearts. Like when you see that they pay you $20 but the price is dropped like 30, then can you really feel good about the $20 they paid out when in actuality the price of the stock lowered quite significantly? It kind of makes you feel like you have to buy in more, which is good if you only go for dividend, but if the company actually fails, then you ended up buying in with a lot of money by that point, because you have to keep buying the dip, so to speak, to lower your average price in case the company's price goes up again and finally you can make some profit on the price itself. So in this new situation, that's a slow and steady climb with a decent dividend. That's just exactly what I would want. With that, let's go into my opinion on the future prospects of the company. With 5G technology becoming more readily available and more demanded throughout the world, I believe that there's a huge place of networking companies and telecom companies in the market. This new technology is being used in products and new products everywhere, and I honestly, for the better or for the worse, I think more and more products will make use of it. For like, just look at it with the car updates, that your smart cars are now being updated and their software is improved when you're just parking around. That is huge, and most of our devices will soon work that way, whether we like it or not. So building out a very stable and large connection network, which AT&T has the potential to do, places them in a very interesting spot, that if they actually succeed in taking a giant market share in this improvement, I honestly believe that sky's the limit. In that case, AT&T can become the great giant name it used to be once again, and its price will almost certainly represent that. Last but not least, a little something about this newly emerging content and streaming service that will be created through Warner Media and Discovery joining into one. It has a lot of potential based on just the names that will be added to it. However, it will start out with a lot of debt. Makes me quite suspicious as to the early stages. Like, I don't expect it to be like a smash hit right off the bat. It will probably take a few years for it to really get going. But depending on how the launch goes, it can probably be a fairly safe long-term hold. The main reason evaluating this new company is important when we're talking about AT&T is because, based on the agreement between AT&T and Discovery, 71% of the publicly owned shares of this new company will be given to the AT&T holders. As a quick example as to what that means, if you're holding 1% of all AT&T shares out there, one, you are very wealthy, but two, you will receive the 1% of the 71% of this new company's public shares, meaning as soon as this company is born, you will receive 0.71% of the public shares of this new company for free. That will be yours as an AT&T holder. To finish up, here is a little portfolio update for the end. As you can see, this year has been quite kind to me as of late, and I have reached over 35% in capital return in a little over a year. Do keep in mind that even though this timeline starts at January, actually I only started investing towards the end of March. Before that, these 2 months were pretty much just a few test trades and us working on our strategy, which actually only kicked in at around July. Before that, we've only been just made a few trades. With the recent drop in the market, I am now just barely in the negative in my current value as of today. This is relatively nice, considering that my strategy mainly focuses on selling those companies that really go up and keeping companies which don't, and I'll just keep holding them until they will become positive and eventually cycle out. Because of this, current value of my portfolio is pretty much always in the negative. So yeah, I guess this strategy is really not for the faint of heart. My biggest loser at the moment is a company I quite dislike, as opposed to everyone else. But as much as I dislike how they became what they are today, they have managed to capitalize on their success pretty well, so they have, unfortunately for me, became a fairly good company. My plan with it is to just hold what I have, and I will keep buying as it drops lower, because soonish it will, at around 500-ish, I expect it to bottom out. That should be a really good spot to buy in with more. And if it keeps falling, I'll just buy more at 300 and at 100. It will not drop further than that. But if it keeps going up, that's just good for me. As far as my recent transactions are concerned, I have spent the past 2 months pretty much selling, mainly selling everything I had in really, really high profit, which is, as you can see, why the past 2 months have been fairly profitable for me. Amassing a lot of cash, which I tried to buy back on the way too, but since the market has been going up quite steadily without much drops, I just kept sitting on more and more cash. It was actually quite disturbing. So the recent downfall in the market is actually extremely refreshing for me. Unless it becomes like a full-blown crash, this is amazing for me. Right now I can buy all I want. Like, as you can see, with all that cash I managed to amass in the past couple of months, I can finally spend it. And I'm still sitting on like 3,000 cash, which is a relatively significant portion of my account. I'm still 11% in cash. So weirdly enough, if the market keeps falling as it is right now, I'm still actually quite fine with that. I still have money to invest, so bring it on, market. Famous last words, eh? As you can see, I did end up buying a decent amount of AT&T as of late. I was a bit hasty on that probably, but the drop was significant enough that buying was completely justified within my strategy, and if it keeps dropping, I will just buy more. I do have confidence in it in long term. Short term, it might not be the best way to handle this amount of money, since the more I put in, the more opportunity cost I have, since my strategy involves cycling companies kind of in my portfolio. But long term, I'm fairly confident that this is a good purchase. Now at the end of the video, allow me a little self-promo. The past couple of weeks I have been working on a little Discord channel and a Patreon, which I plan to launch sometimes next week. A new video will appear in your feed if you've subscribed, or you can just find online, where I will do an official announcement at the end, and the release, I will have them linked down below. The main purpose of these will be to cultivate a little small community of like-minded individuals who can talk about finance, discuss our ideas and strategies, and hopefully understand, or at least make some plans as to how to tackle the upcoming potentially volatile, maybe will just keep going up, market that will arise. On this Discord channel I will also make my Excel public, which holds all my current portfolio and my current strategy that I use, and I will also be quite free to talk to you all, especially at the beginning, while the community will almost certainly be really small, just a few people's. I will be able to answer any and all of your questions there. So, see you there. Thank you for watching. Take care, and I'll talk to you next week. Bye.